You,
Hey, you did it.
I did what?
I see. I just kind of noticed that you're live on YouTube. Let's see.
Oh, so it worked,
Oh,
huh?
yeah. Huh?
It worked?
Yeah. Good job.
All
That's
right.
exciting. Now you can really make some money.
Oh, I have
Good
to get
morning,
that
everyone.
set up yet. So, good morning.
Good morning. There's Alicia.
I have to.
Yep.
All right.
Good morning.
Morning.
You're early this morning.
Oh my gosh. It's so early here. It's 7.
Yeah. I was
Six
barely functioning at 7.
6:53. Yeah, I know. Hmm.
I think we're in the perfect time zone.
Oh, I
Middle.
know.
Central, of course.
I'm I'm
Yeah.
I'm envious of y'all. It's only a 1 hour difference to trade the market, whereas like it's 3 hours for me.
All right.
Oh,
Oh, I forgot to everyone. Oh, well. Wow, when I go live, though, I can't see your names. That's weird. In the voice thread. Oh, I think it's, yeah, to protect on the stream. So,
Yeah.
um,
You can send messages on there. You can type messages on there.
that's
And
weird.
evidently, is it recording?
Yeah,
So
oh, there we go. There, all right. All right, well, we're good to go. We're streaming, I think. I don't know. We'll figure it out. Um, what do you guys want to talk about? We're good to go.
Alicia, pick a question.
Granny.
you know, I have a curious question. You know how
Good.
there's like big money and market makers, control and make most of the big movements. It's like if that's the case and they're doing liquidity grabs and things like that, like do they always form, these formations? Um yeah, what if they just whipsaw the stock and they don't create these these formations patterns, or do they always?
They always do.
Really? Hmm.
Yeah. Market makers, remember, they provide liquidity. That's all that they do. The central banks, they want to make people trade. There's a lot of liquidity up here. We come back and grab it. A lot of liquidity down here. They come back and grab it. That's that's the way it goes.
But can can they just sort of mess up the patterns and go, oh, we're just not gonna create any patterns and just like you know whipsaw the stock?
Well, no, because that's what their job is. Of course, they in ranging it's whipsawing. So, but
Mm-hmm.
really that's just it's creating liquidity, right? Like
Mm-hmm.
right here, right there, right there.
Mm-hmm.
And it's
Right.
more their movement and their algorithms that create the patterns. They're not going out to set the patterns. Their movement creates the patterns.
Yeah. But
Yeah.
they will drive it to areas of liquidity until they
Hmm.
want is called an intention. So that's about as far as understanding market structure.
Hmm.
But now we can't remember. You have to understand that there's different levels of everything's fractal. So oh yes, we're on an up pattern here, right? Well, yeah, on the 30, not even on the 30-minute, but on the smaller time frame,
Hmm.
like the 1 minute 2 day uh, chart, we're in an up pattern. But on the 30-minute chart, 20 on the monthly 20 days 30-minute chart, we're in a downtrend, right? So that's why you always start with the larger chart. So overall, right now on the daily, we're still in an uptrend. So um, so that's how you set your plan out uh, for the week. Is okay on the daily. Overall, we're in an uptrend. Okay, but now we're having a pullback. Now that doesn't mean okay. Now we're going back up because right now on the 4-hour chart we're going down. So uh, yeah, so you have to keep that in mind. How far are we going to go down here on the 4-hour chart? We had this is a pullback here. Um, we set lower lows and lower highs. So, uh, but we came down to this area right here. So this is a change of character on the daily chart. So now a lot of the times a change of character in an uptrend, that's just a liquidity grab to start continuing upward. So you have to keep that in mind when you're planning out the week. Here's the 30-minute. We're in a downtrend still. We got a major break of structure here. Come up, break a structure up. So here's our trading range. Is right here. A quite pretty big trading range here. Um, so but the algorithm doesn't just work on the daily chart. It works. It's all happening all at the same time on every single aggregation. So don't even look at this right now. What is this? This could be the minute chart. This could be the daily chart. You have to you start high and work your way low. So the major levels on the daily chart, you can mark off um, to see what we're doing. So right now, this is a major point of interest right here. So I'd have this marked off. And the trading range really on the daily chart is right here. Softly big. Or you could say it's right here. But these are the major turn pivots right here on the daily. And so you go, okay, well, we set lower lows and now another lower high right here. So until it breaks here, then that was low, and now we're continuing upward, or this is just another low, a lower high, and then we're going to be continuing downward. Don't know, right? Um, but you start with the daily. Then for me, it's the 4-hour chart. So on the daily, we're in a downward. On the 4-hour, we're in a downward. We have lower lows, lower highs, break a structure here, but um, this was a liquidity grab. We had to break a structure, bearish break a structure down, and now we came back up to get this liquidity. It's still a lower high from here, and now this we could have a pullback as long as we stay below 446. Then this is just a liquidity grab to come back up here to start the next move down. I kind of think of liquidity as the power to make the next move. Okay, so you have a lot of liquidity here, all of a sudden, boom, there's a big move. Liquidity here, boom, the next move. And now it came back, but it needs power to make the next move. So now it comes back to grab this liquidity, boom, comes down here. Now we could be coming back up here one more time. I doubt it, but we'll see. But we'll come back around this range before we continue lower. It's like
And could you tell that?
see,
Can you go back to that one chart? Uh, oh, you said yeah, it went down, broke a structure, then it came up to grab liquidity. So
yeah.
how how could you? Was that predictable? How could you tell there's liquidity there, but it wanted to go back and get?
These areas of right here, they're see how it ranges from here to here. This is all. This is what the market does. It wants to make a lot of people trade.
Mm-hmm.
So there's a lot of transactions going on here. There's
Mm-hmm.
liquidity
Mm-hmm.
there.
Mm-hmm. Mm-hmm. Well, how do they know there's more? How come they didn't grab them the first time? I guess because it already passed through there.
Because
Guess so.
that's what they do. They go back where all the orders were here.
Mm-hmm. Oh, yeah, I guess my question is they didn't grab all the orders the first time?
They're not grabbing orders, they're creating orders.
Mm,
The banks make money. They're not like
mm,
where we're gonna buy a lot here and sell a lot here. They make their money through the transactions and they make money off the spread. All right.
oh, well, yeah, that's the market makers, right? They
Yep.
they make money from the spread. Okay.
That's the central banks.
Oh, really? The central banks?
Yeah.
They're the market makers? Okay.
Mm-hmm.
Oh, okay. I thought
All
there's like,
right.
big hedge funds and, they and other banks that help
Yeah.
control the market too.
Yeah, they do. That's the smaller institutions, but they're still, um, you know,
Mm-hmm.
they make things move at the same
Mm-hmm.
time.
And
Um,
then what about inducement? How can you tell when something, you know, when a chart is doing inducement?
Inducement basically is trend lines. So like right here. Whoops. So once that's why people draw trend lines. So it's going to come back up to take all these orders. Breaking stop losses, right? There's like right here. That's what happens in a range too. They create all these orders. Bulls have stop losses right here. Bears have stop losses right here, and boom, they just crush right through all these. And then they'll come up and take the stop losses from the bears and then they make the bigger move. That's why you have to mitigate. Like I said before, you have your moves up. So here's a high, lower low, higher high, and now it has to eventually come back and break this to come down to create a higher high. So now when you have a higher high, higher low like this, and then it stops right here, and I think I mentioned this before, this didn't mitigate this move. So all of this right here, here to here, and here to here, this is inducement. So then it's eventually going to take all that out. That's why, like, fair value gap is basically the same thing. You get a big jump up and it creates a gap here. Usually it will come back down and there's a change of character, but change of characters are a lot of the times in a bearish move down in a bullish trend. This is just a liquidity grab. So it's coming back down to fill this and then have a higher high. Okay. And all that stuff's on the education thread that I did with market structure. So
Okay, thank you.
mm-hmm.
Hey Rondo, can you go over how you use Fibonacci's?
Okay. There's a lot
You
of
usually going from forward to backwards? I saw you. I've never used them. I've always used them as a retracement
yeah,
going
no,
forward.
that's just for my trading style. As far as from the closing bell to, or the opening bell to the close, from the 30-minute chart. Okay, so let's see. Here's 10 o'clock, 8. Okay, let's see. I have to find a good example here. So Monday, where was the bell at? There's movement here. It's got to be around here somewhere. Okay. So here's the opening bell right here at 8:30 my time central. So it opened. Here's the open. So I'll do this like 5 minutes beforehand, and then to get a general idea, and then right when it opens, and I'll readjust it. So you go from the close back to or from the open to oh boy, this is gonna work out. I don't think. Okay. So here's the opening bell to the close. This isn't a great example because they're really not big of a gap.
So close, yeah.
Okay, so usually when it's really tight, and I've seen them a lot tighter than this, where it just looks like a little one line. This gives you Fibonacci levels as far as targets for the day. So throughout the whole day, so let's come out here. This is that Monday. You go by the 30-minute candle. So here's the open. And then, so these would be your targets up. The 161.8, 261, and the 423. So, as long as it stays above the 38.6, you are. This is when it breaks this, then it's considered a downtrend. It's breaking trend.
You have to reset it.
And then you reset it.
Got
So, Now in this example, okay, after the boom, look, right away it hit the first target.
Mm-hmm.
So you always want to take some profit off when it hits that first target. Now, not everybody plays the first 30-minute candle. All right, that's really, that's, you know, so you have to, there's a lot more risk. Okay. So after the 30-minute candle is finished, then you move it up to the close.
Okay.
Okay. So now with most strategies, they don't do well in a range. They just, it's really difficult. That's why most experienced traders, if it's ranging, they don't play it. They just turn the computer off and, you know,
Off.
go golf or something. So once it's set, now look, now you're like, oh, here's the target 440. Where, you know, I'm loading up right here, and then this happens, and look what happened. It broke the 38%. So then what you do here is you fib from where it broke, not the candle, but the 38% level, and you fib to the previous high. So it'd be this 30-minute candle. Okay. Now that gives you the break of trend for the puts targets. So it'd be right here, right here, right here. And notice what happened. You could have, you know, you could have played it down to here, but risk reward, you know, that's why if it hits this target, you should take profit. And then what happens? Then it breaks again on this 30-minute candle right here. Not a wick. The candle's got to finish the body. So then what happens? You do it again.
Do it again.
You fib from the break down to the previous low. Okay, now what I usually do is from here is I'll start taking the previous Fibonacci level off.
Sure.
The first one, I'll leave the second one up. And, you know, then we had a pretty good run up. You know, you probably would have gotten stopped out right here, but you know, that the end of the day was right here, right after you fibbed, right? So when it ranges like that, it's pretty difficult. Now, generally a rule of thumb is once you fib a second time, it's generally going to stay and finish between your first Fibonacci up and your first Fibonacci down when you have a range. And look at where it finished, right in between the two, right? So I just picked a really tricky area right here, and it shows you how when things range, most strategies don't do well. You know, RSIs, MACDs, all those things, they work better. You know, going off of moving averages, they work better when things aren't ranging. But that's the strategy.
Mm-hmm.
Okay, and now the other thing about the strategy is when you set it, okay, like here's the original, the first move of the day. The 78 to 50% is where you usually get your your dip buys.
Mm.
So it might come up here. You might take some out, and if it comes back down here, and starts to reverse, that you get your dip buys, and a lot of times you could, in between, the 78.6 and the 50, you could just uh, buy the dips and again sell at the 161.8, leave runners just in case it breaks out, and you make your run up to 261 and 423. That's another part of the strategy. And then here's the really cool thing that Connor Polifrone tipped me off on, and he's put it on his videos too. But when we were working on this strategy, and he did by far just about all the work on the strategy. I help more or less to help a script out, but he he found that if it doesn't break the 161.8 during the day, it will usually it will gap up to there the next day, after a trend reversal. So this reversed down and then it reversed back up. You could look for a gap the next day up the 161 or even the 261.8. Not all the time, obviously. Nothing's guaranteed, but that's just an interesting thought on that also. But that's pretty much the strategy.
Do you ever use extensions? Fib extensions?
No,
No?
no, I'll just I just do retracements,
Okay.
and depending on, like from here, I'll use it to see where the golden the golden pocket is, they call it, because these tend to be reversals, and right here it dipped down a little bit below, but
I love the 786 for a dip buy.
yeah.
Thank you.
Oh, look at that. We're starting to form a head and shoulders here, right, on this channel. That's interesting.
Good morning, Ronbo.
Good morning. How are you?
I am good. How are you?
Doing well, Ari. Have a good night.
Yeah, and I just noticed that you guys are. I forgot there was lesson today.
Ari, he's dual streaming on YouTube.
Hi, Granny. I know.
Hi.
Oh, oops. I'm sorry. I shouldn't be talking. I'm
It's
gonna
on
get
YouTube
famous.
too.
Why
Am
should
I
you
gonna
be
get
talking?
famous?
Oh
Yeah,
yeah.
we're gonna be famous.
All right.
He's on.
Hi, Pete.
I seen her just a minute ago pop in. Yep, there she is.
Hi. I just
Hi.
woke up. I'm just listening. I'm eavesdropping.
No.
We got a lot of Callies coming in.
She does.
RC's from Cali, and Alicia's from Cali.
Oh, I'm in Seattle right
Well, that's
now.
right.
But
You moved to
no.
Seattle.
I used to live in Cali though for years. I miss it.
I bet you do, living in Seattle. My daughter hated it. She's a concrete person too, and she said, "This is too much, Mom."
What? Too much rain?
Too much everything. It's like, it's too busy. She likes busy, but not that busy because they grew up in Wichita, South Wichita, down in Derby. But yeah, it's a whole new element there. Between there and my other son moved to New York City for a while, and yeah, no, they left. My daughter's back home in Wichita, and my son's now gone south of the border to Argentina.
Mm-hmm. Right.
Yeah.
Okay. This isn't normal chat now. I'm
No,
streaming,
hey,
so
Ronbo, just to clarify, so I understand the first fib, and it's from the open to the previous day's close, and then
yep.
the second fib, um, can you clarify what 2
The
points?
second
Mm-hmm.
fib is at the close of the first 30-minute candle to yesterday's close.
Oh, okay. So 30
And
minutes.
then if it doesn't break the 38.2, then you don't have to refib the rest of the day.
Mm-hmm. Mm-hmm.
Okay.
Okay. Okay. Great. Thank you.
If it does break, then you go from that 38.2 mark to the previous high or low, whatever which way the reversal is going. What else?
Hey, Rambo, you hear me?
Yep.
Okay. Last time I was echoing pretty bad, so I was just making sure it wasn't. Um, I watched a few videos before on the fib and was always kind of confused. And then the traveling trader guy, I thought he came up with the best explanation on it, but he said that you're supposed to always use it from left to right, whether you're doing a swing high to swing low or swing low to swing high.
Yeah, there's people out there like that say that. They're basically the levels are the same. It depends on. See, if if I'm expecting a bullish run, right, then I'm gonna um, see, now I always get that confused. So if I'm expecting a bullish run, I want to know where the golden pocket is. Okay. So I'm expecting a bounce from here to go up. Now on this leg right here, if I'm expecting, okay, that this was a pullback and now we're going to be going down. Now usually I don't go on smaller legs. I don't use this on the minute chart or anything. The bigger the chart, the bigger the move. Uh, Supposedly that's where you get your better indications. But fib to me is just kind of they're completely real. I mean, yeah, okay, off a natural order and things like that. But now since everybody uses them, they're kind of self-fulfilling prophecies. Now this is some magic area where um, I could show you examples after examples, really, where it's just completely nondescript areas, like right here and stuff like that. So, but if I'm expecting a bearish move now off of this, see, now I want to fib this way because I want to see where the golden pocket is right here. All right. So it depends on a lot of different kind of styles, but to say you only have to go one way or another, that no. Like the 30-minute chart, I'd probably come out to the 4 hour, right? um, Whoops, see, I even did it again. um, then I fib from the top and go to the 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 past into the present. And so here are my levels right here. So as long as we stay below, here's the golden pocket. Where's the Fitch gap? You might want to be looking at that and see where that is. But as long as we stay below the 453, we could have a pull back up to here and then continue the next leg down. That's just off of this leg, right? And then you have, same the daily. But then the most important is, your weekly. This is where it gets really important, where you want to fib from the high to the low. And now you can see how, again, funny, this is your golden pocket reversal, but yet this just went right through it. So why not just pay attention to, this area right here? Because that's where the reversal is going to be happening, this liquidity grab right here. So that's why market structure to me is way more important than Fibonacci levels.
Now, when you did the high and the low, what time frame is that? Is that the morning, or are you comparing the previous day's close?
This is the
Still?
weekly chart.
Oh, weekly.
Yeah. Okay.
Okay, thanks.
So you're saying the golden pocket. Well, that was the other thing. He called out the golden pocket as between 0.618 and 0.65 specifically. So you're saying it's from the 0.786 to the 0.618.
Yeah.
Okay.
Again, there's so many. It's pretty subjective. It really is. There's no data. That's why, the Fibonacci as a whole isn't really a set in stone type of thing. It's just a random percentages that based off of nature and everything. So they're just thrown out there. If he would have said the magic numbers are 83 and this and that, and if everyone started using them, then okay, now 83%. So this is the magic number. Important numbers though, like 50%. That's just that 100%, 0%. But why not that? The 50%, 25%, 75%. But he just came up with that because in nature there's certain proportions of things, and he just used that. Sounds good, and I use them, but I use them because so many people use them. So, but for me, it's more market structure and order blocks, points of interest, and things like that. And obviously, channels. It gives you an idea of, trend lines. Now on channel, like I said last week, I think you're on an uptrend. This is your trend line, and the channel line is just where you see resistance coming in. But if you want to keep things cleaner, you could just set your trend line. So. But more important, usually your is your weekly and daily volatility trading ranges, your expected moves for the week and the day, more than Fibonacci levels.
I got a question, Ronbo.
Yeah.
I watched a video last night and it kind of interested me. It was going over OCO management. Do you use that when you buy your options using Thinkorswim?
No. OCO management.
No. So how do you manage your option orders? I think you have like a one click that automatically sets your stop and your
Oh, you mean your bracket order?
yes.
Yeah. I just I am so used to calling them brackets that the OCO. Um,
OCO, for I guess the people that don't know, that's the one cancels the other management.
yeah. Um,
Yeah, I don't use OCOs, but I do use triggers.
What is that
yeah.
called?
Trigger buys. So the trigger right here, your OCO. I got some set up. Uh, it just gives you your target price and your stop price, right? And you make your order, and you could. Beauty of brackets are, especially on Thinkorswim, is you can customize and have a template right away. So, like right here, I have $1 over my entry and a 10 cent under. Right, so that's a 1 to 10 risk reward ratio. And you can set up how many contracts you want to buy, and everything. I'll set in on that. So here's like I got a basic 10 contracts, and wherever I buy, I'm $1 over and 10 cents under. And then so all I have to do is literally click on that and hit confirm and send, and I have my market order in. So that's my 10 to 1 risk reward ratio, all done in one click of my mouse. I'm in and out. And
With an
then
automatic, right?
I could literally walk away for the rest of the day.
Dang,
Yep.
it's nice.
Go golfing. Amal does that from Live Traders. He's an incredible trader. And if he sees a setup he likes, he puts in his bracket order, and it's and then you can set it up to where if he just walks away, he's done for the day. Now, what happens if he doesn't get stopped out and it doesn't hit his target? You can have an order placed where it sells at the bell. So whatever it is, if he's down, let's say you have a 10 cent stop loss and you're down 8 cents, then it sells at 8 cents. If he's up 75 cents at the end of the day, it closes out at 75 cents. So, yeah, pretty stress free.
Who was that you were just talking about? The guy that you were just talking about. Was it Market Trader?
Live Traders.
Oh, Live Traders. Oh, okay, yeah.
Jared Wesley. Yeah.
Yeah, that's one I watched too.
Partner.
One more small question: with those orders that you do with the order brackets, can you do a trailing stop on those as well?
Yes, you can. You could set it up that way.
Thank you.
Yeah.
I put a couple of videos in the chat for this room that shows you different ways to set them up. Pretty nice layout.
Yeah. In the education, Terry?
I just put them in the chat for us here.
Oh, the
in the Ronbo class chat.
Ronbo class. Okay.
Thank you, sir. I'll check them out.
And then once a take profit line and a stop loss line is set on the chart, do you then just, as the chart's moving, you're moving both of those lines up? with the
No.
price?
Trailing
No?
stuff.
You could have
No.
a trailing stop. You could literally on the chart, it will have your
Mhm.
stop and your target.
Hmm. Oh.
Yeah, you can move that up if you want on Thinkorswim. I think on pretty much most of the major ones that they do, where it's on your chart, and you could just, for me, I have it on my option chart, and you can move it up. I usually don't move it up until I see a major dip, and then it breaks the high. Then I'll move it. I'll move it up to that dip if I'm playing it that way.
Hmm.
Uh, Usually for me, I just wait if it's up a uh, but just because it's going up, I'm not going to move up my stop loss and move up my target. I'm not going to do that.
No.
I know if it that my target, that's my plan.
Mm.
Right now, I'll have a second target. Then I might just take 5 of the 10 or 8 out of the 10 out and leave the other two to run. But you have to plan your trade and you have to trade your plan. That keeps you, and the thing is about 2 hour all it or nothing, you set it up and you're done. Because then that doesn't mess, overall, you get your runners, well, then your runners might come down here and you get stopped out. So the theory is you just set your target, you make it, you're done for the day. If you get stopped out, you're done for the day and you walk away. Yet that's your plan.
Yeah. That sounds so stress free.
Yeah, it is.
Amazing.
Yeah, the trailing stop losses and like moving up your stop loss it's a little annoying. So I gotta stick to what Ron is saying and just set it up. And if it doesn't work out, it doesn't work out. And if it does, it does. Yeah, I gotta work on that.
Well, that you got to be experienced to you have to really know that you have a good setup. All right. If you're not really sure, then you might want to move a stop loss up. You might be moving it up to, it's moving up. Oh, I'm in really good. I'm up 30%. And you move your stop loss under this candle, you move it under this candle. That's what these candles are for. Newer traders, they're moving up their stop losses way too close. They get stopped out, and then the big rip.
Not naming no names, but it's Granny that does that.
Yeah. So
And then
you gotta you gotta plan your trade. So when you have this change a character here, and then it sets a higher low, and then also this low sets the channel here. So you set it here. Here's your entry right here. And where would my first target be? Right here. Where would my second target be? Right here. Right? In all actuality, this is a change of character right here. This, considering we're in actually a bearish or a bullish market, that's your liquidity grab right here. And your target is right here. So that's why when this low hit right here in March, a lot of people bought right here. Boom. Now the thing is, it hit this target and then just broke back down. So in the overall context, we're still in a bullish trend right here. We could be coming all the way back down here. There's a lot of liquidity right here at 413, area 416. And then people are like, oh, the sky is falling. No, it's just another it's staying in this trend. And we're eventually going to work our way up to, you know, over 480 right here.
Yeah. So this minor pullback, they say, for August and September is just it's just a minor dip, right? And that you see it going up
Yeah.
back into the
No, not
major
necessarily.
uptrend.
If it breaks this, right? Because right now we're, again, for me, I don't go against the trend. Now the overall trend is bullish, but right now we're bearish. Okay? So I'm expecting a pullback, but then I'm expecting us still to eventually come down to touch the bottom of this channel. But that, if it comes down to grab this liquidity, we break this channel, then we could be, you know, this could be a change of character to grab all of this liquidity and not this, and just continue down to the next level of liquidity, which is down to, you know, 324. That could happen, right? I'm not ultra bearish or bullish until we break this high, right? So right now, let's say this is the minute chart. We're going up now. We have a big retracement. You know, we broke a change of character, but now we have another one here on the daily chart. So we could, this change of character, we could come back up here to mitigate and then continue going farther down. So when you're trading, you got, this is a part of homework. This is what you should do every week. Yeah, and actually intraday trading, you know, every day you gotta look and see what the market's doing, the market indicators. That's why I go over the high yield gains, the inverted yield curve, you know, the New York Stock Exchange. You know, I do all that to try to figure out, okay, what do I think is the best scenario considering the overall context? Is it just going to come back down and then, you know, bounce back up, or are we setting up for a, you know, breaking this and having a bigger major move down? But that gives you the edge, at least, you know, at least equips you to feel somewhat confident. If you're really confident, then you haven't been trading that long. You should never feel really really confident in something. You should always be, you know, knowing all of your scenarios. That's why hedging is so smart. Because if it goes the other way, now you're not going to make as much, but it's a lot safer.
Quick question, Ron. When it touches that trend line right there, that the bottom blue one, you plan on doing the 45 days, or like a 3 months, long calls?
Yeah, I would get 480s probably.
You doing the 45s or longer term?
I haven't looked at it yet, so 45s are, you can't go wrong with 45s no matter what. That's really solid. Or what I do is I'll you could somewhat estimate this trend right here. So this would be your bare minimum or maximum. You can look at 525 by December 30th.
Yeah, that sounds solid.
When you look at the 45-day out, do you do that on a Monday or the beginning of the month, or when do you
You
when
could
do you
do
do, or
that.
does it matter?
You could do that whenever you want.
Okay.
Mostly when it's like sitting on the trend and you get a bullish candle on the to the up towards the upside, then after that bullish candle, I'm assuming that's when you like jump in on that 45.
Yeah. And then the strategy is the 45, 25 delta, delta strike, and usually after the 21st day, 3 weeks out. Um, on
Can you
average,
show me an
not
example of that delta that you're talking about?
right here. Here's the delta,
And what's the magic number?
25.
Mhm.
So right now, what are we? 45 days out. Let's say it's just September 1st. So you're going September, October 15th area. Let's go October 20th. So if you're doing calls, $457s.
Nice.
And right now they're they're not bad. They're 289. They were cheaper a little while ago, but yep.
Well, if you put that up to watch, you can get maybe a better entry point if you set that point right there, and then you watch it to see when it goes down. You could enter
It,
then in
it's
that
definitely
day.
going to get cheaper when it touches the trend line.
Yeah.
Exactly. But then obviously it might not be October 20th, and when it hits that trend line, then that isn't going to be the 25 delta anymore,
Oh, okay. I see.
right? So that's the whole thing. Everything that sets up your plan is the chart, right? So right now, you looking at October 30th isn't going to, because it might. It's going to take a while to get down here. If anything, you're kind of getting FOMO if you're wanting to, you know, have it come down to the bottom of this channel, because it definitely might not come down to the bottom of that channel. And there's other things to look at. The 5-day moving average, the 20. There's a lot into considerate things you have to consider. It's not that easy, but uh, we're looking at a minimum of maybe September 1st. And maybe if it stays on this 50-minute chart, which I doubt it, that'd be September 7th. And a maximum far out would be the 18th of September. So when it gets down here, so now we're not looking at August or October, you know, 18th. Now we're looking at, November, around November 1st area. So it depends on where we get down here, if we get down there. Because if we stay above on this channel, going this way, then you're waiting for other, your channels are going to change, and then you might be waiting for just everything else. If it breaks the 20, then you'll want to have it retest the 20, and then that might be a good time to get into the 450s, because we kind of missed a move right here already. But that's the thing. You write down the scenarios. I got destroyed this week because I didn't write down all of my scenarios on what to do. So uh, it just happens. But you got to treat it like a business, and have your logs and everything with your trade ideas. The beauty of, and that's again, it's so much smarter to play the bigger charts. You have more time to digest things, more time to see things that you didn't see the first time. You're like, oh yeah, oh look, here's the head and shoulders, right? So, and then you have more time to plan out your trade. Okay, if it comes down to, here, this is the weekly expected low, or I'm going to get calls, or hey, we're up at the weekly expected high. I'm going to get it into some puts, things of that nature. And it's easy on Thinkorswim because I could just come up here and I don't do it anymore, but I'm just, because I'm used to seeing this stuff. But you could put an alert on a price right below the weekly expected high. So when it hits, you're like, it will give you an alert, and then oh boy, I should get some puts.
And you right click on there, don't you? On that chart. Yeah.
Yeah. Pretty easy.
Yeah, we like easy.
Yeah, not guaranteed to work, but yeah, on average.
Yeah. I thought it was gonna work. Well, shoot.
Yeah, that happened to us a bit this week.
Yep.
Now, yeah, speaking of that, it might be better. To me, the way things have been going, everything's been big moves in the post market and pre market, and then during the day is just okay. I think twice we had a 1% move, or was it 2? I can't remember. But everything's just been killing us on hedges because it's just 0.3% move, and then you have a 0.7% move post and pre-market. So all the big moves are happening while everyone can't trade, and then we're left. I consider the day traders, they get the scraps of the move. So that's why you have to usually take what is given. I got burned yesterday on holding, waiting for a 1% move or 2% move, which we haven't had on the bear side, except for the day I was gone. Right here, I should have gotten out of my puts right there. I was up 100 and some percent, but I'm like, no, I want, for some arbitrary stupid reason, no, 800% day. I want it. Absolutely no reason,
That greed kicked in.
Yeah, it gets everybody. No one is protected from that. So.
Yeah, I know. Quick question. I was looking at.
Go ahead.
Yeah, go ahead. I was looking at these tasty trades videos talking about iron condors on flat days that are more beneficial than just regular calls and puts.
The what? No, I'm sorry.
The iron condors. I was looking at videos on tasty trades, and they were like on flat days is more beneficial than calls and regular puts or whatever.
Is that in their ODT series?
Yeah.
Yeah. Iron condors, yeah. But boy, if you get a big breakout, you better be careful. But that's why butterflies aren't bad either, because your losses aren't going to be as bad, and you're not going to make as much money. But for beginners, really, you're just one-way trades aren't bad because it's more kind of a feel of, just in the stock market, right? You get calls and you know, okay, if we're going up, uh, you're going to be doing better. Of course, you got theta to worry about. So, but and then more experience you get, then if you want, really start looking into that. I advise people to do that because it's just a better way of trading, especially for maybe longer term uh, strategies. Again, you're not going to make as much if you just do a directional play, because if you notice when you go into a directional play, um, wait a minute, why didn't I get a confirm? That's weird. Um, oh, this is why I just went and bought a. I was going to get a market buy. So you set up an OCO order, uh, and then you can hit confirm and send, and this will give you how much you can make, right? And how much you can expect to lose. Um, and it's pretty high. But then you go to a um, mm, 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 mm. Oh, I got everything so automated here. By has it been that long? I want to buy a custom. I don't want any of these. It's not on here. That's weird. I'm having a brain fart for some reason. I want to buy an iron condor. Oh, that's why.
Don't you have to put the, don't you have to highlight it on the chart, the options, and put the option into the chart? Make it work. Your strike price.
Well, I just did the strike price right here. There we go. So, um, if you want to buy iron condor right here,
Yeah.
confirm and send. Okay. Right now in this account, I don't have anything in here, but here's your break even. Your max profit is $10. Max loss is 990.
Ooh.
Yeah,
That's oh.
that's not
No.
good.
No, no, not with
No,
my luck. No.
yeah. So, um, let's say uh, what I like is some butterflies are pretty good. Also, you get unbalanced ones. There's unbalanced butterfly is pretty good. If you want to hedge, uh, if you feel confident it's going to go one way uh, farther than another, um, control your losses and things like that. But your butterfly, like right here, okay, my max profit is $990. My max loss, $10.
That one's better.
That looks pretty good, doesn't it?
Yepers. That's me.
Yeah, that's a good way to protect your money. Now, again, like I told you guys, during the trading week this week, butterflies are really weird how you make money. So, because what a butterfly basically is you want it to range. Okay, so let's say this green line is the open. It opens right here. Right? Here's the bell, and let's say here's the bell at the very end of the day. Right? So you're down $10 here, you're down $10 here. In between here, like right here, because it's early in the day, like right here, right? You might make 2% if you sold right there, right? So right here, you might be up 20% because you're later in the day. Later in the day, closer in the range you are, the more money you're going to make. So now right here, you're up, 50%, right? And then it goes down. Now you're at your $10 max area. And now here's the thing, closer to the bell you get, and I mean, I'm not talking an hour, I'm talking about the last 3 minutes of the day, right? You could be right here and you could be up 400%. But then 1 minute before the bell, it comes up here. You're up 20%, 10%. So it gets very exponential at the end of the day. And I mean very. So just like, when you're in like calls from right here at the end of the day and it spikes up, right? All of a sudden you're up 800% and then it dips back down and you're up 200%. Okay, it's like that with the butterfly too. But if you hit it right on the, if you got the, diamond hands and you wait and let's say 30 seconds before the bell, you're right on the open, you're right on the exact same price, you can make a crap load of money.
How do you capture an exit when it spikes up on the top like that? Just like with the trailing stop? Because humanly, it's so hard to, like get out and exit. Or like market order when it spikes up like that?
Well, by the time it spikes up like that and you get a market order in, you're going to be selling down here.
Oh,
Most likely.
okay.
All
Right. Then,
But even with the limit order, it could spike up here and come back down and it didn't trigger.
Mhm.
So again, you want to go by, if you're in calls right here and it starts spiking up, you might, here's the liquidity right here. So I'd say you have 10 contracts, I'd have 9 of them out right here. And maybe one to maybe run if it really wants to jump up and try to get this area right here, this liquidity.
hmm
Okay.
yeah, I guess, yeah, that's my question. Like, how do we try to get maximum profit? Like, what's the technique to try to capture,
It,
get it at the top?
the answer
Mhm.
always, you don't know where the top is, you don't know where the bottom is.
Mhm.
You
Well, I guess
your
trailing stop then helps us, right?
well, yeah, but see, trailing stops are good. They're okay, but the answer just about every question is always market structure. Right? You got a trailing stop, you might get stopped out right here on some, it hits some liquidity, it bounces in this liquidity zone here, but if the trend is going up, I'm not gonna put my stop in the middle of this liquidity area. It's on the way up. It's up to maybe grab this liquidity right here or this right here. That's why you have to see the charts. So definitely there's some liquidity here. So
Mhm.
your trailing stop might, have worked out for you here because it could have went, it could go back down. But if it hasn't, that's why I like channels. Is from here to maybe here. So funny that would have stopped you out right here. Or
Hmm.
if you really think that it's coming up to here, um, you suffer through that. It's a gamble, but then you just, and this is what I did yesterday. You just reset on the dips, and then here's your stop loss. So then you just watch it, and as long as it stays above that trend line, you stay in it, right?
But you say the last few seconds or the last minute, it makes that big spike, and you could potentially, I guess I'm asking, like, how do you what's
Tell
the
the
strategy
future.
to well, yeah,
You
how
don't.
so you just put a limit order for, because it potentially could go up that high, and so you're just kind of guesstimating and put a limit order number to capture at the top.
Well, down here, if you were smart, which this was a good time to get in, because this it was down. Oh boy, I can't remember now. I changed everything, but if you would have gotten in right here, this would have been your first target right here.
That's a bullish engulfing too, right?
Yeah.
And
If
yeah,
if
so
you
that's another good sign.
if you strictly go by candles, yep.
I mean, I like to combine the candles with the structure.
Yeah, you should. That's concurrence. That's exactly what you want. That's your setup. So, but you have to be on your toes. But now this is a 50-minute chart. But of course, as soon as this candle's done, you have to already be watching the back and see. Okay, we're probably coming up to this range right here. You should already have that planned out. You should be seeing this so as this is coming down, you're like, all right, should I be getting into, more puts right here, or my calls I should be getting maybe. And well, I did call the 439s somewhere around here, and they hit. What else
Do
did
you
I
look?
have? I can't remember, but here's
Do you look at level twos
no,
to see what's going on?
no.
Oh.
Level two. I'll look at
Manipulated.
I'll look at Bookmap. The futures to see where the bigger support and resistance blocks are. But again, even on Bookmap, it's live. It's where everything is at the time. But they use those sometimes. They're magnets. So you have a huge order up here. Let's say this is Bookmap, right? So so everyone's like, oh, we're going up. There's this huge order up here. It gets close, not even all the way up, and all of a sudden it disappears. And then a huge order comes in down here. And then boom, it comes down to that order down there.
On Bookmap on Thinkorswim, you can zoom out and zoom in and see it better.
Yep. No, for me, I have mine all the way out. The only thing I care about is the biggest and the farthest out. To give me, but basically, Granny, they're going to pretty much coincide with the weekly trading ranges. Volatility.
I'm a little curious. That deviation channel that pinches and expands. I wonder if Eyeless is already pinching.
Eyeless?
Yeah.
Oh my gosh. Yeah. I mean, when you have a massive drop in anything and it sits down there.
Well, I see it pinching. It's contracting. Yep.
Yeah.
Wow.
What did you call that? An eyeless?
No, Eyeless is the stock. That is
Oh.
with deviation channels.
Oh, okay.
In other words, it's not moving much. If it doesn't move much, it's really going to contract like this.
Those big
So,
words throw Granny.
so your it's your piece of crap stocks that basically always do this, right? It's just all of your penny stocks,
Yeah,
INND,
just keep going down, down, down.
right? So
Doesn't find support.
you just anything, it doesn't matter. But so here's a good stock. And now, what especially on the daily, things are going down. You're uh, bearish, and then when you start seeing things even out, if you're above the this white line is the means, the average price, right? You usually smart money goes from around the second sigma down. That's when they start buying. If you notice right here, boom, second sigma goes up. Now right here, it went above the second sigma. And that only happens around 2% of the time. Good time to get puts, right? And boom, comes down to the average price. So it took a while, but it eventually comes back down to the average price.
Hey, I wanted to tell you I've got to go. I've got a meeting with my daughter, but I wanted to let everybody I'm going and have a wonderful weekend, and I'll talk to y'all Monday.
All right,
All
Granny,
right.
good seeing you. Look,
You too.
we'll see
Everybody
you.
have fun.
So you think Tesla's going to continue that channel, or is going to break it?
Well, usually what happens is, you got your channels in here too, that helps, but it gives you an idea. So funny, look at where it bounced off of, the average price. Usually when you get down to the means, there's a lot of fighting going on. You could, funny, now this is a half deviation. It's not as important as the main ones, but you do get, there's fighting over this half deviation right here. So I see it like a flow. Okay, they tend to act like magnets. So if we can't get above that, most likely, then we're going to come back down to the average price, right? But if we break this, then I expect a pullback to this to act as support on the way to the next deviation up, right? And the thing that gives you help is the deviations right now are what? They're going up. So you should be bullish on Tesla still. That doesn't mean I'd get into it right now. I would wait for the break and then a retest. And right when it hits that half deviation here, then I would get in calls, have my stop just below the deviation, and have a play up to the first deviation up.
Pretty much most of your trades are set up with retracements, right?
Me? No.
Like a pullback. You wait for a pullback, or you just do the break and wait for like a bullish candle and then jump in?
No, there could be a bullish candle right here. Right. Let's say it breaks, and then you have one more bullish candle right here. Well, now you're in between the two. I'm not getting in right in the middle of a channel.
You wait for the rejection and then the bounce back.
I wait for it to come down here. And then a bullish candle. Right? Because it could, this is fighting, it could just come back up and then break through, and you're
a false breakout. Mm-hmm.
You're waiting. See, the fight is over this right here. The average price. We bounced off. It doesn't mean we're going up just because we're now at the half. This could be a false breakout, and then we come back down to the means, and then we break below the means to go lower, right? But right here, see, it broke, came back up, and then broke, came above, retest, came back above, and then here's the break right here, and you could have played it up that deviation. Or if you're in a longer, you're in leaps or something, then you might want to maybe see if it comes up to the second sigma. But smart money doesn't mess with this crap, right? Smart money is easier to see on the bigger chart. So here's the 3 week. Here's the 3 week. So here's what I call dumb money area, the first sigma. The first sigma area. This is just builds liquidity. So 68% of the time it's going to stay in this area. Well, you're not going to get into this because it could be going up, it could be going down, right?
Unless it's scalper.
They leave that for the scalpers. So here's where the smart money buys. Second sigma down. Where do they sell? Second sigma up. They don't care about this crap. They might, but here they let it run. So 99.8% of the time it's not going to break the third sigma. And sure enough, it got to it, and then what did it do? Now remember, this is the average price. So if this is 3 sigmas up, you're going to have a big swing down to average this price out. And that's what it did. It corrected. So now it most likely is just going to stay within the, 1 sigma up, 1 sigma down for a while. So it'd be smart. And look right here, first sigma, sell. We broke the average price to the downside. So see how, it could do this, it could do that on the daily. The bigger chart, you're just okay. We're fighting over the average price again on the weekly. If we break above it, maybe play it up to this candle right here, 251. With the idea of it coming back up to the next sigma up, 301, 300. If it gets rejected right here this week, we could be at least coming back down to 209. This is just the half deviation here. See, here's the channel. So if it doesn't break this channel, we're already below the average price. We're probably coming back down to this half deviation and maybe even coming down to 179.
Rhonda, what's the name of that? That I think it was a YouTube channel guy where you got the pinching deviations from.
Well, they're not pinching deviations. It's just the daily. It's just the daily deviations. I could have the daily deviations just look like this. Just they'd be going up maybe or down like. The SPY right now. Let's see what that is. Okay, the SPY on the weekly is still going up. On NVIDIA, it should still be going up. Yep,
Super up.
See how it's going up? Funny, look, that's where I said most likely we're going to be, coming down on NVIDIA. Why didn't I see this? It's always after the facts. I did not look at NVIDIA on the weekly deviations. That would have been easy money right there for puts. Crap.
Probably going down to the average price.
It could be coming down to the average price, but now remember the average price isn't going to be 302. It's going to be coming up to here maybe. You see this, if I put a channel on here, like 321.
That'll be awesome. I'll jump right in that.
So, but like, see, ILIS, the deviations are going down. So you could, if you want, you could have your deviations look just like this on the daily chart. On the 1 minute chart, you could have it look like this, right? The only reasons why they look like this is because of the script, the way I have it set up. It looks like this. So see, so the daily, it doesn't look good on ILS. I'll put the SPY on here. So on the SPY, I have, here's the daily deviations. Here's the weekly. So see how the weekly doesn't move? Because the bigger the chart, slower it's going to move. Well, here's the daily. See, it moved a little bit. And then here's the 6 month, or this, the 6 month average deviation. We're at -1 right now. And here's the daily -1. The weekly -1 is right here. So that way I could see it on a where the bigger deviations are on a smaller chart. And if I pinch it together, see, it looks like that. But yeah, his name is Connor Polifrone, and the I don't know, the channel name is Boiler Room.
Okay, thank you.
Yep.
Boiler.
And you could just go to I think the Boiler Room, or the boilerroom.com, or Boiler Room Trading, I can't remember. And there he's got all kinds of stuff you could buy, and you could buy this script right here. And then you could it depends on how you set it up. So it's a big script.
Shit, did they see it? No.
This isn't. So
It's not on this one?
Here's your setup. See, you got all these you have to deal with to get it to look the way that you want. What deviations you want to see on what chart, aggregation and everything. So it's really complex, and it's going to take you quite a long time. He does have a video. If you do buy the script, it comes with instructions on how to download it, set it up, basic setup, things like that. So okay, guys, it's 10:30. I'm gonna wrap it up. So I'm done for the day. I got a lot of yard work to do. So
Have a good one.
Great.
All right, have a good weekend.
all right, you
Thank you.
guys, take care.
Okay. Take care. Bye bye.
Yep.
All right,
Bye.
Ronbo.